Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. Let's get started on this Tuesday, August 12th, 2014. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, number one, markets are trading slightly lower, although we have a short-term bull flag developing on the intraday SPY. Remember, the SPY dictates the S&P 500, so essentially it's the tracking ETF for the S&P. Therefore, you're looking at the S&P 500 on a 10-minute chart, so every candle is 10 minutes, going all the way back multiple days. What you can see here in the short term is that the markets are lower than the open, but they're making a small bullish consolidation pattern. So the question is, does this pattern hold true? Do we see it play out a little bit later? Now, a couple things to be cautious about on this bullish pattern. Number one, the 50 MA is lurking just above current price. So even if you pop up, it's going to take a significant buy program to get through the 50 MA. All right, not to say it's going to fail. You just might not have enough bang for your buck on a bigger move up. It's going to take something pretty solid to take this thing to the upside significantly. All right, more than anything, my analysis is showing we're probably going to stay sideways for most of the rest of the day. You might uptick a little bit into that 50 MA at some point, but for the most part, I wouldn't be expecting too much price action. All right, a lot of market indicators are telling me that we're going to continue to go sideways to slightly up on this market until really about Thursday of this week. And starting on Thursday, maybe as early as late Wednesday, but Thursday to Friday, you might see some weakness start to develop. I don't know how significant at this time. That's something I'm paying attention to, trying to differentiate and understand so we get a better sense for trading purposes. Either way, day trading is a great thing to do in any market as the market's going up and down. Will give us opportunities intraday. Couple things to go over. Number one, some significant signals developing. I want to show you a couple signals. Number one, on corn, CORN. You guys know I've talked about CORN quite a bit. Was getting crushed earlier today, and then look at this reversal, folks. Big time reversal to the upside. You're now up about a penny on the day, which again doesn't seem like a lot, but look at where it was. And what's significant about this is that it actually puts in on the daily chart another bottoming tail. And the interesting thing about this is this tail right here, which was a bottoming tail, was actually a fake print down here. Today, we actually came down to that same low in real time, meaning you actually traded that low. This is now more significant to me. And what I'm looking for is I want to see a close on CORN to make sure it has a bottoming tail on it. All right, if it gets a bottoming tail today, and they basically have the inability or are not able to really sell this corn ETF, which is essentially the commodity corn off, you have to be looking at upside. And I've said this for a long time. I can continue to accumulate CORN and CORN options, calls, by the way. This thing, assuming we get that bottoming tail today, guys, all right, I would say by late next week you're at $27 on CORN, the ETF. Right now you're trading at $25.97. So I mean you're looking for a potential dollar plus move on this in just the next week. And again, the squeeze on this will be kickstarted when you close above this 20 MA. Little bit of a gap fill. Once you get through this area, it's really going to take off even more so. All right, so again, beautiful reversal. The signals I've been seeing have been telling me for now about a week and a half that you should have a bottom in corn. And again, today is just another example of me reading those charts correctly, and you can see the results. Really amazing stuff, guys. And again, I just want to explain this. So a lot of people would say, well, you're at the lows of the chart, you're maybe making a bearish pattern. So how do you arrive at a bullish consensus for CORN, the commodity, right? Well, think about it like this. All right, notice how you're making that bearish pattern, right? Sideways is bearish, no doubt about it. But notice how the 20s slope down. Usually if a pattern or a chart is weak, the 20 sloping into current price crushes it, and you have another leg down. For instance, right here, sideways into the 20, and look at the collapse. But notice how that's not happening here, and you're getting bottoming tails. All right, basically what you're seeing is a buyer or buyers stepping up underneath corn and being a supportive nature. They're buying it all up. Now, part of that is me. I mean, I'm buying too. So, I mean, I'm not that big of a mega institution, But me and other intelligent investors are loading up down here, and we see the same thing I'm seeing. And ultimately, once you get through this 20 and this gap fill, off to the races it goes. So I thought that was a really interesting little factor today. You got one of the farmers report or whatever they call that report, and I think that's why you saw that volatility around midday today. Okay, a couple other things to go over here. Twitter is continuing to be a strong player here. I did tell my members Sunday night that they could go long Monday morning on Twitter as long as you did not see a daily close. And this is the daily chart now. You're looking at daily chart of Twitter. As long as you did not see a close below this line, because this is support. And sure enough, on Monday, you retested that line, you bounced right back, and look at where Twitter is today, up at $44. So again, the alert for an entry was this line at $42.80. That's basically now $1.30 higher on Twitter off of those lows. Now, I don't know how much it's going to go up, to be honest. I don't know how high it'll go. But ultimately, I do think it was a nice call right there. And it has a little bit more upside before I start to get a little bit more on the bearish side. All right, so just a couple little charts that give you a good idea of what's going on out there. Facebook today, just talking about social media. Facebook is weak. You can actually see on Facebook how you had the gap fill right here, and you came into that and then got a bounce, but it's been a very muted bounce. That tells me Facebook's going to go lower eventually. So Facebook should head lower. The question is when. I would say as soon as the market starts turning down significantly again, you're going to see Facebook break down to the 50 MA. All right, and again, just think about it like this. You came down sharply into support, and you got a very muted bounce. All right, that's not a good bounce. That's, in fact, a bearish pattern formation right here. That tells you that eventually you're going to break lower. All right, basically, it's telling you there weren't enough buyers to push it up significantly. All right, so that's what we have going on there, folks. A couple other things to look at here. Let's take a look at Baidu today, BIDU. Baidu's down just a little bit as markets are down as well. That stock's been a strong stock, but again, take a look at this. A little bit of a bearish flag pattern forming. Very easily should hit the 20, and I think this will go back to gap fill. And then again, this will happen on the next wave of selling in the markets. Apple, let's take a look at Apple. Apple continues to basically be on the flat line, had a good bounce off support. This line has been an epic level of support for a long, long time. I love how you got above it here on a closing basis, never really confirmed, kind of came back in, came back up, then got back into this line, bounced again, got back into this line, bounced again. You might say, well, where's this line coming from? Well, let's just zoom out on the charts and we can see very, very clearly. There was a key gap fill that I've talked about for months now right there, and that's been a significant level. So now the big question is, as we head into the later portions of August and volume could be getting lighter, where is this chart going to go? Are we going to see it go above 100, which is only $4 away, basically a 3% move up on the stock, or are we going to see it, 4% move up, I suppose? But are you going to see it come back in and break this line? I would say when you get back below this line, on a closing basis, that's when you're probably going down here, and this would be your next stop. But right now, it's above, so you give it the benefit of the doubt. I could see this thing at 100 by the holiday in early September, 3-day weekend in early September. All right, so that's what we have going on there, guys. Let's take a look at the dollar today. The dollar is up a couple pennies, continuing to have a lot of resistance right at this range. I don't see anything significant there. Let's take a look at gold. Gold gapped up this morning, but is pulling back in very quickly. Now is negative on the day on the GLD. And silver today is, again, showing a lot of weakness. This is a very weak bounce on silver. Had a sharp move into gap fill, and then look at the bounce. Now look at that compared to the gold bounce. Night and day, right? Look at the size of that bounce. So you have to pay attention to that relative strength, relative weakness signal, because it really does tell us a lot about the overall charts. A couple other things that I'm watching today, guys. Nuance Communications took a beating off of earnings. I did have a level here at 16, which actually has held as support 200 MA on the daily chart. You also have this consolidation area. There's no trade there at this point on the day, but again, I thought that was interesting. Dendrion is something I want to mention to you guys. DNDN hammered today 35% to the downside. Now, I am going to make a case here for a long on Dendrion, and I'm going to explain why. All right, let's think about it. Number one, Dendrion basically came out and said that they may have to kill shareholders' equity, which is essentially bankruptcy, because there's a loan payment that they're going to have to repay in full cash of about $600 million. And the thing is, this is the key. So that headline's bearish to me, right? Very bearish, right? That's a negative. Oh, bankruptcy, bankruptcy, bankruptcy. That's always something you never want to hear from a stock. However, if you look at the finite details, this is what I find fascinating about it. First of all, the stock is pricing in bankruptcy. It's already at multi-year lows. I mean, if I zoom out on the chart, look at this chart. All right, multi-year lows, trading at $137 right now. All right, now the key is to understand this. The stock, all right, said, or the company said, that that loan payment wasn't due until January 2016. So they essentially have 16 months to figure something out. All right. In addition, they reported earnings, and their earnings were better than expected. They didn't make money, but essentially they lost less than expected, as well as their revenues were stronger. So yes, how are they going to make this $600 million payment? I have no clue. But if they can continue to grow this Provenge revenue and lower their losses over the next 16 months, which is a long time, I would guess that there's a buyer out there at some point that could get interested in this. So basically, the way I looked at this is this. All right, you have a stock trading at bankruptcy levels. Basically, I think it's at under 200 million market cap now, a buck 37 per share. Okay, in 16 months, use it and trade it like an option. Think about it like an option. So it could go bankrupt, and you're paying $1.37 premium for a strike price, a expiration on the option of 16 months out. And if they can figure out anything in the meantime, anything at all, a buyer comes in for the company, they can somehow make that loan payment, they restructure the deal, then the stock could literally double, absolutely double. All right, in the very least, it would go back to where it was prior to this move. Maybe even higher with the shorts. There's like 40 million shorts out there, or some crazy number. So to me, honestly, it's kind of interesting. I got to be honest. It is interesting because the bad news is out there. We all know that they could be going bankrupt. It's trading here, but think about the upside. They have a lot of time to go before that becomes an issue. All right, they have a potential drug that's a blockbuster. I mean, they're having trouble selling it because it's so expensive, but honestly, it works. Okay, and that's why even though it's expensive, it's still making strides. Um, and you have a situation here where it's trading at levels where you just understand the risks involved. So I'm going to watch this a little bit more, and I dabbled in it a little bit today. I may buy more and more and just accumulate, but I could see at this point, any good news, this thing would shoot up. And at this point, the bad news is out there. You basically know the worst case scenario. So I just think this is an interesting, very intriguing scenario on Dendreon, especially because it's not like they have no drugs out there. There's a lot of small cap bios that are trading near bankruptcy levels, that are running out of cash and so forth. And all those stocks are they have no drugs. They have stuff in their pipeline, but it's not even proven yet. Here you have a company that has an actual drug that works. And sure, the sales aren't what they'd want because it's so expensive, but if they can figure something out, and you could be looking at a double or a triple pretty easily. So, again, very intriguing to watch here, and I suggest keeping an eye on it for those of you that are interested in a higher risk play. And again, treat it like an option. So, when I go into an option, I use a small amount of money, and I say, listen, hey, I understand I could lose it all. It's an option. So, the same thing with Dendreon. You treat it like an option. You put a few $1,000, $5,000 in, whatever it is, and you try to double, triple your money. All right, so that's just an interesting little idea there. Anything else on the radar here? Let me just see what else we have here. I think that's about it for now. Again, we're seeing corn still hovering right underneath 26. I want to see that close with that bottoming tail on the chart. And then we want to see follow through tomorrow, just so everyone's understanding about what we're looking at in corn here. So you got your daily chart bottoming tail here. As long as we close right around this area, that's great. But what we want to see next is you want to see, get this, guys, you need to see follow through tomorrow. So it doesn't have to be a big update, but you want to see like an average update, maybe 20 cents, 15 cents upside minimum. Anything more is gravy. And again, that would be humongous for corn. And you could actually say at that point, confirmed bottom. Now you look for the breakout above the 20 MA there and the gap fill, and boom, to the upside this thing runs. All right. On that note, folks, I'm going to step aside. Thank you all for being for checking us out here. I encourage you to come and join us here at InTheMoneyStocks.com. Take the 7-day free trial. Join the pros. Learn how to pick these stocks. Learn how to find these stocks as we just continue to make money, folks. I called a perfect bounce starting late last week. We made money on the upside. I'm going to start to take some profits off the table pretty soon, and we'll look to start getting on the short side. Get here now so you get these trade alerts. Research Center 7-day free trial. Enough said.